Tom Cloud with an update for Jerry Robinson and his group. We're very thankful to be able to bring this to you and update. We've had quite a year and quite the last few months going on, and it's been hard to stay updated, to keep y'all updated, and I apologize for that. And certainly these two hurricanes that we've had in the southeast part of Georgia and north part of Georgia and North Carolina have been devastating to some of our clients and friends, and we're just hopeful for them and praying for them to come out of this in a way that they can recover from disaster. We're looking at it square in the face. Don't even know where to start. I think the budget we've talked about, but we need to always mention it. It is the bull in the china shop, so to say. It's not going away. We've just seen the end of fiscal year 2024 on September 30th, and the start of the new on October 1 is the start of the new fiscal year. And we took in $5.2 trillion and we spent $7 trillion for $1.8 trillion, the largest deficit in the history of the world, of any country, any place, any time. When you get to a $35 trillion debt and you just count the interest at 3%, that's another trillion every 100 days that we're creating out of thin air and borrowing it from the Federal Reserve, to where we have to pay them back on the securities, the Treasury notes, Treasury bills, the different treasuries that are issued in different years of maturities, months and years. So here we sit. It's out of control now. There's nothing that I can see that can stop a complete collapse of the currency. And I don't think it'll be too long. I mean, we're talking about months, not years, to where nobody wants our securities. They don't want to buy them because they're not. There's better debt out there right now if you want to be a debt investor. So we look at this and say, number one, we have got to lower the deficit, and we've got to lower it only by cutting spending. And that's not popular in the political world, as we all know. So we got to do that. The interest is going to continue to compound. We're going to see this thing. Where does it stop? With the collapse of your currency. We've watched the dollar come way down, and really even going back 70, 80 years, there's been an 87% loss in purchasing power of the dollar. We remember when gold was $32 an ounce back in the 1930s. Now it's $27.50, $2,750. So we look at that. The other thing that nobody's talking about is another huge bull in the china shop. That's unfunded liabilities. This is where they look at me and say, you're going to live to 85 and you're 75, then you're going to live for 10 more years that we've got to make an allocation for. We owe it to you and we're going to pay you. But how do we do that? It's just a liability that comes due every day. New people get paid in Social Security and all these different projects, and we look at it and say, where's the money going to come from? It's paper. I mean, what it really is paper with some jargon written on it that you take it as good, that you've got this piece of paper that really is worth nothing inherently except the ability for somebody to accept it and use it, and that's going away. I just came back from 2 weeks over in Croatia, and also over there in Italy, and what an incredible, they wouldn't take our dollars. Not any, we could not get rid of dollars for 2 weeks that we were over there, and it's just unbelievable to see how people just always wanted dollars. Now they don't want dollars. They want euros, and that's what we primarily had to buy. So we're going with The other thing is the printed money we're talking about is this is money that is not to be repaid. This is money that was created by Congress and the Senate for things they wanted done. So they vote and give each other something for their area of the world they're interested in, and then they get the vote, and the vote is made, and money is created. Immediately, the dollar's been devalued because there's more currency chasing the same goods and services, and that's where we are right now. We've looked at debt forgiveness out there. We've looked at all these different things that are being created in Congress and Senate that don't have to be paid back. They're just printed out of thin air, and yet we stand there and wonder why the problem like it is. The other thing we see this week is China and is the largest buyer of gold through the Basel III agreement that's now 21 months, is averaged 3% a month. Unbelievable. If you'd have started January 1st, 2003, buying up some gold every month on that, you'd be looking right now at about a 50 to 60% gain in 20 months, 21 months. And now it's going to be picked up even more. Bank of America is telling their investors to buy gold. You've got to diversify. You've got to have something that can't be created out of thin air, and that is gold. And we're going to continue to see the U.S., China, and other central banks buy gold. What do they know that you don't know? I really have had a big problem understanding it, as I've talked to very wealthy people during this, and one of them told me, he said in 2008, it took me all the way to last year, 14 years, to get back to where I was before the financial crisis of 07 and 08, where gold was the only thing that went up. I'm not talking about an isolated stock. I'm talking about an index. We're headed right now into the same type situation, in my opinion. I'm not going to tell you how much the Dow is going to drop, but I think it's going to drop. I think you've got to diversify and get that. We've talked about being diversification satisfied, where you're happy, where you have so much in gold, so much in silver, so much in stocks, so much in bonds, so much in real estate, ETF real estate, different options you have available. We think it's very important to do that. We certainly have talked about it in the Bible, Ecclesiastes 11:2, to diversify your assets different ways, 7 or 8 different ways, because you don't know what disaster may come upon the land. And certainly we've had and are having a disaster, from climate to all the devaluation of our dollars in the world market, people not wanting them anymore, and that's just the beginning. We're seeing the baby boomers, 1945 to 1955, being born. They're transferring wealth to the children and grandchildren, and they don't think of investments the same way you do if you're a senior citizen or baby boomer, like I am. So we look at the BRIC nations and their meetings. They want a new currency. Will there be a gold-backed currency in the next 12 months? There's a lot of talk about it. The LBMA meetings were in the United States last week, London Bullion Market Association. And a lot of stuff came out that would lead you to believe that this could be the last year of a dollar. I mean, we could certainly see anything coming out of there. So watch all the Social Security. There'll be adjustments to it as it's created out of thin air, because there are millions of people that live on Social Security and barely make it, and yet we're running out of money. In just a few years, we have no money for Social Security. It didn't go to the people that put it in there. It goes to people that need it, and I don't have a problem with that so much. It's just how much it is, and that's not doing anything to fix it, or even trying to do anything to fix us. But the BRIC nations, we see now We're talking about that. We see Kenya with numerous other small countries wanting to join to get out of the U.S. dollar. We certainly have seen all this military spending too. A lot of it is not borrowed, it's just created. Money to Ukraine, money to Israel. Just create out of thin air and put out there, and you that don't get the right product in your portion, then you lose. And the people that have the right product and know what to buy will be the winners. And gold is, without question, my opinion, personal opinion, is the number one investment you should have in your portfolio. You must have it in there because it is your sanity. It is your safety blanket. It is something that's always going to hold its value, always has. It's purchasing power. And we find ourselves right back there, and I'm just very prayerfully that each of you do this, because certainly it's going to go on, but the next 2 weeks are crucial with what we have an election coming and the opportunity you have to get in there. And yes, I get calls every day. Gold hit an all-time high last Friday at 2,750. Right now, as I do this tape, it's 2,720. And I think you're going to see $3,000 gold either in this year or in the first quarter of next year. And we have gold at 3,000, and then it starts its march up as all these problems unfold that I've talked about. I think I've talked about all that so far, but I just want to, close. We've got Trip Cloud, my grandson, running the IRA department, doing a tremendous job. Been with us since he got out of college back in March. And if you've got an IRA or would like to develop an IRA, a lot of our clients that are baby boomers are coming out, and they're creating their 2 IRAs from coming out and saying we're going to put a percentage for stocks and bonds. That's one self-directed IRA. We're going to have it for gold and silver, platinum and palladium. Another, you buy another IRA. But he can help you with that, and you can call us at 800-247-2812. That's 800-247-2812, and Trip will get right back to you if he's tied up on helping someone with their IRAs that already got them or have to take some out because they're over 72 years old. So all these things he can work with you on. Catherine, my daughter, is doing a lot of the CFO work. So we're having strictly a family business right now. Its business is now 48 years. I started in 1976. So we're excited about the future and helping you diversify and get you in the right place to take advantage of what we think will be the biggest shift of currency ever over the next several years through all the money coming available. And a lot of us on the sidelines right now, and that's a good thing, not a bad thing. People that don't want to get aggressive are sitting and waiting till it becomes more clear what percentage they want in these different basket of investments I've just talked about. So that should be very helpful. I'm available to talk to you. Call the 800 number, leave a message there. Happy to talk to you and answer specific questions that you might have on it, because it is, as I said, one of the most important times in my career of doing this 48 years that you need to know what's going on and you need to be sure you're diversified. I don't care what your financial advisor says. If he doesn't have you in gold, he's making a serious mistake. Just look back the last year, 2 years, 3 years, and think where you would be without gold in your portfolio. Yeah, and silver also is a little different story. It is more of an industrial metal, and yet it's up over 50% this year. has had a crazy good year, and we think it will continue on. But there's also some things we got to worry about with silver, like the car industry going on and solar panels and the economy, whether it's good or bad. So it's not like money like gold is. And it's not part of the Basel III where central banks can buy gold and count it at spot price. So anyway, hopefully we've opened some new windows, new doors. Do your homework, look at what you got to do for the election, get where you want to be, get your percentages divided, and get ready for a rough ride, because there is no easy answer to what's coming down the road. It's just no easy answer whatsoever. But anyway, it's good to be back on here, and look forward to getting back and trying to do this every two weeks. With the special report, this is Tom Cloud signing out.